Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. In this video, we're going to do something a little bit different because we had several trades today, or non-trades I should say, but there's a lot of lessons to be learned in the way the stock's traded, and I think it's beneficial mainly for all the people that have taken the course and will view today's activity as added lessons for the course that should benefit everybody going forward. So before we get started, first we'll take a peek at today's email that went out to subscribers. This goes out at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market opened. Today there was a correction, so you can see this one went out at 9:24, but this was the second send of this email. There was a typo in there. So what we had today was a bunch of gap trades or potential gap trades on the board. We had 6 possible trades today. IBM, CSX, UAL, AAL, NTRS, which is Northern Trust, and First Solar. In this email also contained is a laundry list of potential gap fill trades today, and the first one on the board, Gilead Science, hit its gap fill level at 72.56. We'll take a look at that one as well. Let's go into the charts because I really want to provide some value in terms of the reason certain stocks did certain things, and there's a takeaway here that everybody can use into the future. The first one we'll take a look at is UAL. Also, what we want to keep in mind, this week is options expiration week. During the week of options expiration, you have a tendency for certain stocks, or mostly stocks, to come up short of their levels or trade a little bit unusual in and around their levels. That tends to happen during options expiration week. So we just need to understand that. We don't really need to understand the why behind it. We just need to understand the fact that it happens. With UAL, we can see that the prior trading day, which was yesterday, the stock closed all the way up here at $78.51. The stock was gapping lower at the opening just over $76 and traded lower. And what you can see here is the stock came close to the level and then had the reaction or the bounce we would have been looking for. Had this traded straight into the 74.72 level, and this was given out on the email that you just saw, then this would have had the same bounce and we would have had a nice profitable scenario. The stock came up short and bounced, and therefore what happens is that level is off the board, it's off the table, and this specific item is taught in the course. When a stock comes up short and has the bounce we're looking for, it diminishes the importance of the level. Therefore, we don't want it anymore. Also, you'll notice that the stock consolidated over the level for a period of time, about an hour, and therefore then traded through the level, came back to fight it a little bit, and then traded lower. We almost got to the second level, which was $73.60, and the stock made a low of, the stock made a low of $73.70 and bounced again. And that's indicative of options expiration week. Not a lot we can do about it. You just have to know that these things happen, and therefore everything that's taught in the course, and all this I'm telling you today is taught in the course, it's supposed to keep us safe, keep us away from trades that are no longer the same probability as they were if the stock traded right into the level. And that's the point of this video. I think it's a good learning opportunity. So even now, and the market's still open here, it's in the afternoon, if the stock came into the 73.60 level, because we came up short and bounced, we don't want it anymore. Therefore, that trade or that price level is off the table. Next one, CSX Corp. Same kind of routine. The stock consolidated for about an hour in this range above the level, and therefore it diminishes the importance of the $51.21 level. You can see that we traded through it after consolidating above that level, although the stock did come back, fought the level, now is above the level and trading higher. But when the stock consolidates over a level like this, it certainly changes the trade, and therefore it changes the risk profile of that trade. What the stock did in here is called bullish consolidation. It's also called an inside bar pattern. And when you see that and a stock consolidates on an inside bar pattern like this, it's poised to trade higher. And that's what we see here. We see it breaking out of this bullish consolidation pattern. And that in and of itself could be a separate trade. It's not part of the gap trading strategy. It's just part of technical analysis. Next up, we take a look at Northern Trust. Same routine. The stock traded almost to the level, coming up short, making a low of 88.33. 88.33 against an 88.07, bounced higher. The high in the next candle was 89.17, so we got around an 80-cent bounce. That's what we would have been looking for, only it bounced ahead of the level and then traded back down through the level, and then it fought the level. You can see the importance of these levels, and now the stock's trading higher, but it's not the same trade. We want to see the stocks come into the level. If this candle here that came up short came into the level, we would have gotten that same 80-cent bounce, maybe more. That was the trade we were looking for. When it came up short, it changed the risk profile of the trade. Next one we'll take a look at is First Solar. First Solar was gapping higher at the open. Our level that we identified as resistance for First Solar was $46.99. The stock came up short, making a high of $46.75 before pulling back quite a bit. Would have been a nice trade, came up short. We can chalk that up to options expiration week. So you can see here that these levels are either coming up just short or consolidating over a level. It changes the trade. When they come up short, it's just a miss. When they consolidate over the level or under a level, it changes the risk profile. We can see the importance of the price levels that we identify each and every morning. Today, however, happened to be one of those days where we're just not getting what the market is giving us. In fact, it's giving us a little bit of a pain in the butt today, but that's just the way it works. That's the market. There's nothing we can do about it. You have to take what the market gives you each and every day. And some days the market just doesn't give you the exact trades we're looking for. I'm only looking to enter trades at a specific price level where I know the probabilities are extremely high of success. When the stocks consolidate or have near misses, it changes that probability. Therefore, I don't want the trades after that. This is a business where patience and preciseness pays, and it pays dividends. The next one was off that gap fill list, which was Gilead Sciences, and you can see here the 72.56 level. The stock traded right up into that level and stalled out, and it's trading just a couple of pennies below that level now, but you can see here the importance of that level. Today is a very light volume day in the market. In light volume days, it's very difficult to take a short trade, especially after the first 60 to 90 minutes of trading. After that, short trades are very difficult in light volume, and the reason is, in light volume, the path of least resistance for most stocks, most equities, is higher. So even if a stock trades up into a level that's a resistance point in light volume, you're just not sure about the type of pullback you're going to get from that level in light volume. Therefore, sometimes it's better just to leave the trade alone and move on to something with a higher probability. So with that, I'm going to wrap it here. I think, or I hope, that that was a beneficial lesson for everybody that's in the gap trading community with me. What's important to realize is that each and every day in the market, if you can take away something of value, even if there was no trades, if you can take away a lesson that you can use at a later date, then that was a beneficial day. With that, I'm David Frost, LazyGapTrader.com. Thanks for tuning in, traders.